time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear, it's all downhill from here. Remember life, remember how it was. I'm G, Michael Jackson, all this shit. Say what up to Maggie, the shoe. Say what up to Benny. Say what up to life and my child. Running up my bikes, running up. I'm for me, 18, still in granny 6. Take it easy, give me some sweet, which I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear,
Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 6th, 2023, and we're going to talk about today about an indicator that has accurately and precisely predicted every major move of this uptrend, okay? And if it's correct, we are about to have another huge move to the upside, all right? So that's the basic gist of what we're going to talk about today. As always, we're obviously going to touch on the price action, not only for Bitcoin, but for altcoins, as well as the US dollar currency index, and whatever else we get into talking about. So if that interests you, then keep watching. Hope you're doing well on this Monday afternoon. We're starting a little later than usual, okay? Typically, we start at 1:30 p.m. Eastern Standard Time. That's New York time or DC time, right? Because we're in the DC suburbs here. But, things happen. And that's one of the joys of working for yourself. You can kind of be flexible, yeah? And even when you don't work for yourself, you can hopefully be a bit flexible, right? It keeps stress down, unnecessary stress, Nobody dies, everybody's fine. We're still getting the information out, and we're going to have fun doing it. So, hope you're doing well. It's actually a bit cloudy in the DC suburbs today, but it's still a nice day. Not as cold as it was over the weekend. All right. Let's get into it. All right. So, Bitcoin on the 4-hourly time frame, all right? You can see this massive uptrend that we've been in, and so many traders, so many speculators, so many sort of, crypto influencers are telling you that this is unsustainable. We're overheated. It's been a massive run up. Massive, absolutely massive. They've never seen anything like this before. And it just has to stop. You have to calm down. You can't keep going like this, right? So that is the idea, that is the mentality for why a lot of people, and we talked about this on Friday, a lot of people are selling any kind of retracement, any kind of consolidation, okay? And we know theoretically nothing goes up unimpeded. Everything is going to have fits and starts, right? That's just how nature works. Nothing goes without some sort of hitch, without some sort of impediment, okay? So these consolidation, these intra-wave consolidations, as we call them on this channel, are to be expected. But a lot of people where they're having trouble is reading the price action, okay? They're reading the price action. And just a quick note on indicators. Indicators are great. Indicators are fun. We're going to talk about an indicator today, right? Very useful indicator, but it's an indicator. Lots of people right here and now are getting exposed for not being able to read price action and having an over-reliance on indicators. And even indicators, my friends, have to be interpreted. So at the end of the day, you can never escape developing a skill set in reading price action. And what does that do? That helps you not just have a trading thesis that is founded in good data and a high probability sort of outcome, but also it gives you the confidence to be able to stay with your trading plan. You can see what is happening right now. And again, this is not to disparage anyone. I don't know why. Or I guess I know why, but I don't want the energy of this live stream, of this channel to be, those traders suck and I'm best, right? Like, whatever. Like, everybody's learning. Everybody makes mistakes at some point in time and uses those to grow if, they stay with it. That's not the point. My point is, look around and see who has conviction in their trade theses. And even as Peter Brandt, legendary investor, he always says strong opinions, weakly held, right? It's important to be strong in your convictions, or else you're not going to put money on it. You're literally not going to trade it. Trading it is saying, I not only have this thesis, it could go this way, but I'm going to put my money where my mouth is. That doesn't mean no risk management, but do you understand? So many people, so many big accounts are waffling. They're like, oh, yeah, see, I told you it's going this way. And then we go in a consolidation for 2 weeks, and they're like, I don't know anymore. I told you, guys, be careful. You gotta be cautious. Be cautious. And, they're selling out of their positions. And I say watch that, because it tells you exactly what you want to avoid when you really want to develop skills in trading, right? It doesn't mean you're always going to be right. That's not the point. The point is, whatever you did, you read, you hold on to until which point it's invalidated. And even when it's invalidated, your risk management kicks in and you're still playing the game. That's the whole point. It's not, could go up, could go down. That's not trading, right? That's nothing. That doesn't mean anything, right? So, just pay attention. And the whole point in developing these skills and learning how to trade and learning how to read price action and, coming up with high probability trade theses is so that you can, with conviction, stay in a trend. This is like really where you get all your money. These trends. Few people, I don't know anybody in the world, to be honest. I don't know anybody in the world that kills, even the best range traders in the world can't make a fortune here, right? I know some people that are pretty good. They make their bones in range trading. Like, that's their thing. Chart Champions, for instance, Daniel at Chart Champions, that's his comfort zone. So he actually likes this. Like, his P&L is highest when the chart goes sideways, because all he does is short the top and long the bottom, and then does the same thing for the middle. And that's just, again, trading is so personal. Everybody's different. But for this type of trading, and I know we're going to get into price action for a second, but I love the live streams because we can go wherever the conversation goes. And so it's kind of stream of consciousness. We're going to tackle, the main topic or the theme that we're tackling for the day. But anyway, we're going to keep going. So Daniel from Chart Champions, great range trader. All right. That's his strength. And he teaches it, and it's great. But actually, very few people can make money consistently here. Why? Because the margins are so small, right? The moves here are small from the bottom to the top, and they're very erratic because it's all corrective price action by definition, right? So even a Daniel from Chart Champions, the best range trader I know, to be honest, can make money in this range, but I don't know how much money, honestly, you're making in this range as opposed to being able to trade these impulses. And impulses are made for making money. So even somebody who lost or didn't make any money for 300 days in that sideways zone, 234 days, right, can out trade somebody who was successful. And, obviously you're not 100% successful here. Maybe you're 55, 60, 70, 75% successful, and that's still good, but that's nothing compared to how successful you can be in an impulse, in a trend. So trends are really the way to go. So I think most people are going to make, and most people have made money in markets, not just in crypto, but in all markets, in these trends. So really being able to read these trends and being able to stay with them, that's where you really make your money, okay? Staying with them. The other day, I was just on YouTube, and I don't follow this account, but I did in the past, back when I was learning, just started, and this account was saying, guys, I've sold 33% of all of my long position here. Okay? And he was basically saying, I'm a genius. But if you really think about it, you do not make money by fading trends, by selling too early. That's actually one of the ways you don't make money. The way you make money with these trends is you let it ride. And I've been saying this for months. Once that trend starts, when we identify it with a high degree of probability with our reads in the market on a high time frame, what you're going to want to do is let it ride. Because this is how you make life-changing money. Not just, 40% here, 50% here. But no, when you go on the higher time frame, let me turn this indicator off real quick. When you go on a higher time frame, and this runs, and it 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 hits our high time frame targets. That's the life-changing wealth that's made in the market, and you don't worry about the fits and starts, okay? So I say all that to mean this. Don't be distracted by the intra-wave consolidations. What you want to do is get in the trend at a reasonable time, and it's still a reasonable time, let it run, and whenever it decides to do intra-wave consolidation, just let it happen, right? But in order to do that, you have to properly recognize that this is a trending market. And I'm going to tell you why. Today, there is an indicator that's showing us it's a high degree of probability that this is indeed a trending market. Okay. There's a chart I want to set up that I didn't get to do. So let me do that right now. Here, 1 second. 1 second. I'm a little confused as to how to fix this. Here, let's do this. Hope you all are doing well. I'm going to read the comments in a second. I see that there are some comments. I'm just going to switch. I want to show you another chart that I didn't have a chance to set up yet. And I want to show you this chart. So we're going to look at the SPX. Because it's going to show us what I'm talking about with the indicator that we're going to discuss today. Whoops. Okay. All right. So we're going to talk about that in just a second. All right. So let's keep going. Let's read some comments. Congress says, hello. Congress, Bitcoin is still ranging. Yes, it is. When moon? That's a great question. So Congress asks, when moon? And I think that is a great segue into our next topic, which is this indicator that I have in the title that's saying that I'm alleging or I am claiming has read this trend perfectly up until now. And it's the moon indicator. It's the moon indicator. Literally the moon indicator. Okay. So why people these things get lost they get lost in language, in history, and some people forget why we say certain things, right? So just from a linguistic vantage, why do we say moon? Because the moon is far away, and we depict the price as being a rocket going to the moon, which is our traditional depiction of something far away, right? Although the moon is quite close, it's a moon by definition. It's tethered to the gravity of the planet. But there's another reason, and that reason, I think, is embedded in our cultural consciousness. The moon is a multiplier. This is why we call people lunatics. Because if you have a bit of crazy in you, and I'm talking medically, right? I'm talking based in fact. We call people lunatics because on a full moon, those things come out, right? Like the hidden or latent nuttiness, craziness, psychological imbalance that a person would deal with would come out in a very pronounced way to the surface during a full moon. So full moons are multipliers. Full moons are revealers. They show the true nature, right? You have a werewolf, which is part man, part wolf, right? And this person only turns into that on the full moon. Do you understand? So the full moon is a revealer, a multiplier. And when we're talking about financial markets, for those of you who think this is just a gimmicky thing, there's actual data, science, research, serious research. Trust me, lots of money has been put into trying to figure out all financial markets with any which indicator that even shows a slight bit of accuracy. And there's a lot of money and a lot of effort, a lot of research, serious research that has been put into moon cycles and moon phases. And in my personal research, in my personal experience in markets and looking at moon phases, I've realized that these moon phases here, this one is a full moon, this one is a new moon, this one's a full moon. They're most reliable and their effect is most pronounced in a trend. And Elliott wave theory really tells us, it defines what a trend is. Like, technically, right? Objectively. A trend is the 5 waves up, 3 waves down, 5 waves up, 3 waves down, 5 waves up. Okay? And it's an extension of that, and that's exactly what we're getting here. And so the moon phases, in this case, are they're so accurate, because here, a full moon, that denotes the beginning of the trend, almost to the day exactly, okay? One can say that, preceding this full moon, this was upwards, this was a leading diagonal. And I have a bit of a word on leading diagonals. I thought about it. Remember Friday, I was talking about a leading diagonal, a 1, 2, 3, 4, right? Something like that. And I said, this leading diagonal is going to break out. I thought about it. I don't believe leading diagonals exist. Okay, this is kind of an aside, but I think this is important. What are leading diagonals? Look them up, right, in any manual of Elliott wave theory. They're moves that look structurally diagonal, where they're impulses, but they look like corrections. They're like part correction, part impulse. And typically, you'll get a wave 1, wave 2, wave 3, wave 4 with a deeper wave 4 than usual. And sometimes wave 1 will be the same size as wave 3, and then you get an extended wave 5. I now am convinced, and I thought about this, and I was like, because this leading diagonal that I was looking at on Friday, that obviously didn't play out. But I thought to myself, why are leading diagonals so hard to spot while they're forming? It's because they're corrective, and they're not impulsive. And I believe that people made up the leading diagonal to explain A-B basing, right? Certain phases or forms or circumstances of A-B basing. And if you look at Ralph Nelson Elliott, the progenitor of the Elliott wave theory, his original works, there is no mention of the leading diagonal. Zero. People look at certain phenomena and they explain it. And because people don't believe in A-B basing, they're like, well, this must be something, an impulse. Let's make up something called the leading diagonal. And it stuck. But I don't think leading diagonals exist. And one of the main reasons, just to wrap this up, because we're not going to talk about this all day, is it's so irregular. One, this first wave, second wave relationship is super irregular. The second wave retraces beyond the first wave's phi ratio. That is literally the only time, if you've heard me talk about wave 2 corrections, I always say wave 2 does not retrace beyond the phi ratio of wave 1, except in a leading diagonal. But I thought about it. Leading diagonals aren't a thing, and so wave 2, that's not a real wave 2. That's an AB base. That is an A wave and a B wave flat correction. what we're calling a wave 1, wave 2 situation. And wave 3 and wave 4 is, there's no regularity to this. Wave 4 violates that wave 3 phi ratio continuously. And then also remember, in a regular impulse, one of the rules, you'll note there are very few actual rules. There's tons of guidelines and principles, very few rules in Elliott wave. One of the main rules is what? That wave 4 can never come into the region of wave 2. Except, you guessed it, in the case of a leading diagonal. Leading diagonals aren't impulses. Alright? So, all my Ellioticians, I present this to you. Have you thought about this? And this is the beauty of doing your own research and really advancing the science, advancing it. Because instead of just taking everything and assuming that everybody's already figured everything out and, you know, Prechter and Frost have never made an error, no. You have to really think about it. If a leading diagonal is an impulse, then why the hell does it break one of the few rules in Elliott wave theory? One of the rules is, there's, I think, 3 rules. One, that wave 2 can never come below the starting point of wave 1. Wave 3 can never be the shortest of any of the Elliott waves. And wave 4 can never come into the region of wave 2. Those are the 3 rules of Elliott wave theory. Everything else is a guideline. And the quote-unquote leading diagonal impulse breaks one of those rules. It's bullshit. It's not a thing. Okay, so anyway, that's a side note. Again, I think this helps me because it's kind of an epiphany I had, and I'm never going to look at something thinking leading diagonal. I'm just going to think corrective wave AB base. Okay, anyway, so the idea is that these moon phases accurately predicted this corrective sequence, right, what we call leading diagonal, and the beginning of the impulse here, and it correctly predicted the beginning of this 15-day consolidation. And it accurately, if that's true, it's accurately predicting the day we break this consolidation to the upside. Okay? And there's more. I know not that many data points for, you know, high degree of probability to make conclusions. But obviously, you can backtest the moon phases. And you can look at the traditional markets. We're going to do that in a moment and see how the moon phases accurately predicted to the day almost that impulse as well. Okay? Now, what about moon phases is a thing, right? And as this is an educational channel, first and foremost, I welcome you, I invite you, and encourage you to do your own research. And one of the best places to do research on moon phases in any markets, okay, is this website, Lunatic Trader, okay? These people, this person, they've been using the moon cycles to trade, and they've been researching it for many years, okay? And they're traders of traditional markets, but it doesn't matter. A market is a market. Any freely traded asset on an open market is fair game. And here you can see that according to the research, I'm going to summarize it, moon phases are statistically significant in determining uptrends and downtrends in markets, okay? And typically on the day or 3 days prior or three days subsequent to a full moon or a new moon, you get the move. So meaning on day 0 or day 3 of the full moon, today's the full moon, February 6th, 2023. That means either today or the 7th, the 8th, or the 9th, we should see a move up indicating a statistically disproportionate positive move because it's a new full moon. A full moon typically represents a market bottom and leads to a move up. A new moon typically represents a market top and leads to either a sideways or a move down. And also, watch this. So this was, all right, again, full moon represents a market bottom. We got to move up from there, okay? New moon represents a market top. We got to move to the side. But actually, this trend is so bullish, and this goes back to our ability or our attention to really reading the high time frame chart. Okay, a lot of traders are struggling with reading a high time frame chart in their high time frame thesis that this is just a bear market rally. We're still in a bear market. They're expecting this to come back down. Okay, so they're really, really on edge. They're playing this on the small time frames, and they're nervous. They're trying to get out. But on this channel, we're high time frame confident that this will continue. So we're not hedging, and we're not afraid of these intra-wave consolidations. But if you noticed, after breaking this 434-day resistance, that is a downtrend that Bitcoin's had for 434 days, and retesting it as support here, we've been going sideways and up. So if, let's say, you did sell at this point on the new moon, we would have continued to form higher highs and higher lows essentially in this channel. That is, there's a likelihood that we break up and out of this channel and we're not even making lower highs and lower lows. That's how bullish we are. That even our consolidations are up and to the right. Okay, so that's essentially what I wanted to show you. And again, I want to corroborate this with some more data. More data is better, okay? So let me show you really quickly the traditional markets. We're not really interested in the traditional markets per se, but I do want to show you how the moon phase indicator that you can get on TradingView, or you could just look up, when the full moon is, when the new moon is. Doesn't happen all that often. You can see how this lunar indicator did the same thing it did in the traditional markets as it did in Bitcoin. Full moon. Remember, full moon, 0 to 3 days after the full moon, that's denoting, according to the research, a market bottom. And after which you should expect a move up, right? All things being equal, you should expect a relative move up in the market. That's exactly what you got, almost to the day. You see that? Boom. Okay, move up. Then a new moon. What do you see with the new moon? You get a sideways move. Again, you get a move down, but again, this consolidation was sideways and up. So this really shows the strength of a trend, right? Even on a new moon, where you should get a move down, you did, but in the aggregate, that move down led, even in the time between the new moon and the full moon, to more upwards price action. Once again, you get a full moon. That represents a market bottom. What do you have here? More likely than not, you have a 1, 2, 3, 4, 5 situation and a 1, 2, 3. 5 waves up, 3 waves down. You get the Q from the lunar phase indicator, right? That the the full moon is made for buying. That is representing the market low, or the local market bottom for a move up. And that's what the indicator is showing. And also, if you look at your, if you look at your momentum indicator on the daily time frame, let's say that this continues in that way, you are also seeing some sort of bottoming here on the daily time frame. Again, on strong moves, on impulsive moves, don't expect these momentum indicators to come all the way back down. A lot of times you can get some sort of coiling up, right? So that's on the daily time frame. The 4-hourly time frames pretty much come down all the way back to oversold territory and looking to come back up. Let's see the hourly time frame all the way back down into oversold territory, right? So again, you can see this in the traditional market. And again, we're not that interested in the traditional markets, but I think it's uncanny just how consistent these moon phases are, especially in trending markets. But again, do you understand? There is no shortcut. There is no so I'm just going to use this indicator from now on, and I don't really need to bother with learning how to read price action because, I just can't, or it's too difficult. No. This moon phase indicator is most useful, it's most effective in my experience, and I think you could just look at this yourselves. It's really, really telling and helpful to look at in a trending market. And this is the trend. Every time you see a trend, new moon, down, full moon, up, new moon, down, full moon, up, new moon, down, full moon. Okay? And a full moon shows basically a bunch of sideways price action for 230 days. This is mostly why I chose not to really discuss the moon phases indicator during the sideways price action, because from my own research, from my experience, it's not that useful in these ranges. Yeah? These ranges are too choppy for this indicator to be really useful. But in trending markets, it's a very powerful tool. And, if you can read what a trending market is, you can identify a trending market, right, through good understanding of price action, through good understanding of charting, you can make use of these moon phases indicators and use it corroboratively with your overall trade theses on a high time frame. So that's the point I wanted to make today. I think that's really helpful. Okay, all right. Now let's talk about. So we talked about moon phases. Again, I welcome you to backtest this. What does that mean? You may have heard of that term in trading and charting. Backtesting basically is what we just did. You go back in time and you look, when else has this happened? When else does this apply, or does it not apply? Right? You go back in time and see, okay, this indicator is accurate based on my observation of it. You don't just take anything for granted. Yeah. And you can go throughout the markets, right? You can go through your watch list and see, okay, if this is a trending market, then I turn on my moon phases indicator, and a full moon showed me the market bottom. Okay, I go up, a new moon, down, and then a full moon, I should go back up again. Yeah? So you can see it throughout, not just in Bitcoin, right? You can see it throughout. Do you see that? It's uncanny. It's actually really uncanny. But like I said, if you're interested in this, do your own research. There's plenty of good material, university research teams that have done a lot of work into moon phases and how it affects markets at large, okay? And you can use that and extend it to Bitcoin and the cryptocurrency markets, because it's just another market at the end of the day. All right, now I want to talk about the DXY, all right? On my Twitter, there's some people that are under the impression that the DXY is showing strength. Okay, I saw a tweet by Jason Pizzino, another crypto YouTuber, who claimed that, the DXY is just really strong right now. And I would argue that that is not true. And this is, again, an issue of being able to read the markets, being able to zoom out. Okay, quite objectively, if you look at the DXY, ever since September of 2022, we've been in a strong downtrend. Okay, strong downtrend that's gone down and down and down and down ever since. Now, at some point in time, sometime in the future, this downtrend will turn back up. Nothing lasts forever. But what do we know about price action, charting 101? You can't change a trend just by all of a sudden changing direction. No. What do we know about charting? What do we know about how trends change? What do you know about how trends change? You first need to absorb supply, go sideways for a bit in what we would call an AB base, okay? And sometimes that sideways can be upwards facing, sometimes it's downwards facing. In any case, you make these accumulation channels and then break them to the upside to change the trend. So if you just know basic charting principles, you know that this trend is going to continue until it hits that sideways price action for a while to absorb all of that selling and then makes a change in trend. Just like what Bitcoin did, right? 234 days it took for Bitcoin after it went down for 400 some odd days. It took 234 days to go sideways before starting to go up. And this is also why we're quite bullish on Bitcoin, because we've read that whole phenomenon of accumulation of the depressed supply. Now, what's the difference here? If you look at the DXY on the daily time frame, did you get that accumulation? Was this the accumulation zone? Absolutely not, my friends. Absolutely not. Okay? And here is, again, where you can just look at it, eyeball it, and then if you turn on your indicators, your stochastic RSI momentum indicator, okay, as we have down here, you can see very clearly that there's nothing bullish. There's nothing bullish about this uptrend, this small, local, 3-day uptrend. Nothing. It is an exhaustion of a local corrective pattern. Just like what I said, when we're looking at Bitcoin, we don't overreact with the intra-wave corrections. Here, with the DXY, you don't overreact with that either. You understand nothing goes down in an unimpeded straight line. You're always going to experience some intra-wave corrections, right? That's why when you're looking at Elliott wave impulses, you got wave 1, wave 2, wave 3, wave 4, wave 5. You don't look at just one line up. No, you have those intra-wave corrections, those counter moves. Here, however you're reading them, you see some counter moves, right? You see a lot of different counter moves. This is just another counter move, okay? Another way to look at this is the following. Take one trend line, right? And you place it like so, okay? This is the trend from this point on, right? So obviously we've been going down since September, but if you look since November of 2022, this is the trend, the downtrend, okay? Very clear downtrend. No Elliott wave, no super complicated sort of technical analysis necessary. Just a simple support and resistance, right? So you make a trend down, and what do you see? You see that every single time you hit the top of this trend, you go down, okay? And what do we know about the tops of trends? Like, there's a lot of people on the internet that are in the crypto community, in the technical analysis community at large, that just draw lines on charts, okay? And they get made fun of, and they get called out, and people say, oh, technical analysis is all bullshit. Just people drawing lines on charts. It's all subjective. There is some of that. But what makes these trend lines that I just drew on the chart objective and sort of reliable? Why can you, with a high degree of probability, rely on them? Two factors. One, the strength of time and the strength of trend. Strength of time is how long has this trend been going on? So like I said, since November of 2022, you've been in this downtrend. So that's 78 days. So that's the strength of time, okay? We're on the daily chart. That's 78 different candles where the trend has been going in one way and it's consistent. The other is the strength of trend, meaning how many touch points? 1 touch point, 2 touch points, 3 touch points, and now 4 touch points. Guys, if I want to figure out what's going to happen here when this comes and touches this uptrend, this resistance, I have to go back in time and say, well, technically, it's likely going to be a downwards movement because the last 3 times this happened, that happened. Okay, last 3 times it touched this top, it went down. Okay, obviously at some point in time, it's going to touch this line, and it's going to do what we say, consolidate at resistance, and break up and out. Okay, at some point in time, it's going to happen. But now, as an analyst, as a technician, it's your job to determine, is this that time that the DXY breaks this downtrend that it's been in since November of 2022, okay? Well, first and foremost, if you look at your indicators, your stochastic RSI indicator, again, your momentum indicators, they're great, they're simple. A lot of people, they're saying, buy my indicator, all right? The MDX 3000 or the you know, again, not to disparage, there's room for everybody and there's room for everything. The market cipher 5 million. Guys, it's not that complicated. You're just looking at trends. And at the end of the day, no matter what you do, no matter what indicators you use, if you really want to be successful, you have to learn how to read price action, first and foremost, and use indicators corroboratively. So, our indicator here, our momentum indicator, is saying this is overbought. Okay? That's on the daily time frame. Okay? On the 4-hourly time frame, it's saying this is overbought. Expect a move down. Okay? On the hourly time frame, it's saying this is overbought and we're coming down. Okay? So, the most important ones, the daily and the 4-hourly, are telling you you're expecting a move down. Okay? You're looking at your price action. You're at a major resistance. You should expect a move down. That's that simple. Guys, keep it stupid simple. Again, I want to go back. This channel is big on Elliott wave theory. I talked about Elliott wave theory every single day. You can see Elliott waves on my charts, whether it's a corrective or impulsive move. I'm into Elliott wave analysis. I'm a huge fan. But you don't always have to make everything some complicated, complex Elliott wave count. In this case, I don't fucking know what the count is here. If this is a wave 1, wave 2, wave 3, wave 4, wave 5. But it doesn't freaking matter. It doesn't matter. I don't need to know. Okay? Maybe when this is all said and done, I can count it. But again, you want to be practical. This is a really choppy move. A super choppy move. Okay? So the chance, my hit rate, okay, the probability that I have in reading this accurately and saying, oh, this is wave 1, wave 2, this is wave 3, wave 4, and this is I don't fucking know, and I don't have to know. Not everything. Sometimes you have to know when to use the hammer. Sometimes you have to know when to use the drill. Sometimes you have to know when to use the pliers. Just because you have the tool doesn't mean you have to use it every single time. I think I'm a pretty good Elliotician. Doesn't necessarily mean I have to sit here and tell you what count this is before making any sense of what's going on in this price action. I hope you understand. There's a time and a place for all your different tools, okay? And so we used Elliott wave to find the top of this 14-year move. That was awesome. Great. Very useful. And then we used Elliott wave to read or to count the subsequent AB base. Okay, great. That was tough, but yeah, very insightful. Now, we know that this is a trend. Whatever it is, however you count it, it's not going to stop until you figure out a way to consolidate and accumulate, go sideways for a bit, absorb all of the supply, put in 2 degrees of AB basing and a pivot, and then change the trend. Keep it simple. The best analyses are simple, straightforward, practical. It's not about trying to impress people on TradingView, trying to impress people on Twitter, or wherever else you post your trading ideas. It's about making money. It's about making a proper high probability thesis, and then obviously having good risk management to cover in case you're wrong. Okay, so that's what I'll say on the DXY. Very, very, very. It's not a complicated read. I won't say it's a simple read, but it's as simple as it gets. It's support and resistance. It's as simple as you make it. Let's say that. It's as simple as you make it. A lot of people like to complicate things. They like to talk about all these extraneous different factors, but it's simple support and resistance. You clearly have a support line. You clearly have a resistance line. These lines have some history. They have some data. 1, 2, 3, 4, many data points. 1, 2, 3, many data points. They're reliable. Okay, just use them. You're at resistance. You're probably going to come down. And when you come down, you're probably going to break this and continue down. Done. Or maybe you continue to come down in this way, in this channel. Right? That's it. Don't complicate things. But that's exactly what we're looking at. Okay? Nothing more, nothing less. So that's the DXY. All right. Now, it's been tricky. It's been tricky for a lot of traders, okay? Lots of traders, they don't like it when you're sideways. Sideways means indecision. Sideways means, okay, I'm not exactly sure. Is it going to go up? Is it going to go down? So what do people do? They panic. They panic and they sell out, or they go short. They forget to read the larger trend. So what have a lot of people done? You can look online, you can look on Twitter, but you can also look on CoinGlass, and you can see that in recent past, more shorts have accumulated on the market. So you can see here, shorts are growing. Here as well, if you look at the BTC statistics, more and more shorts on the market. And that gives you, if you're long, you like that. Why? Because typically, when people are all bunched up against a certain wave, against a certain trend, that's precisely when that trend goes against what most people think. All right? And so here, everybody was bullish. Everybody was bullish. And then we went sideways up for 14 days, and now everybody's bearish again. Great. The wheat is separated from the chaff. The pros are separated from the amateurs. The chart literate are separated from the illiterate. The ones with conviction are separated from those with none. Okay? So only those traders, chartists, speculators with conviction don't mind this and stay. Okay? Worst case scenario, and I mean worst case scenario, this does break down, but it breaks down to retest this line. Okay? What is this line? Again, this is the downtrend that we've been in for 434 days. Did we test it sufficiently over here? I asked myself that question. Maybe, maybe not. Okay? If we ever did get a breakdown, it would be a wick to this support resistance turn support, and then a move back up. So I wouldn't see us come down any further than about 21.3, 21.4. Okay? That's just me. But I think it's also highly probable that what we see here, and we're going to go in the smaller time frame in just a moment, and I think we can get rid of these. I think we get the point. We've already gone over that. So I think this is possible, but I think more probably we move up and through this channel, not breaking down from this. And I'm going to tell you why. So let's look on the smaller time frames, okay? And let's turn off our moon phase indicator. And let's turn on our momentum indicator. Okay. So let's actually go even smaller time frame. Okay. So here I really am looking at this as being some sort of AB base, okay? Right here. And the end of this channel, this whole channel actually, being some sort of corrective flat, what do you call it? A complex corrective flat, okay? So like maybe a W, let's see, X, Y, X, Z. Okay, so a 333 correction, and perhaps this is the entire AB base that changes from this impulse down and leads us back up here. Okay, that's my best read on this entire move, right? That's taken all of 15 days now, 16 days, okay? And this is, I think, really obviously, like, we've entered this trade all the way at the bottom of this trend. From when, not down here even, but all the way down here. So the risk is minimal. But for people who just got into this trade, they just got in, there's more risk for them, so they're more careful. But this is why when you're looking at a high time frame trend, you get in and you close your eyes, because you're going to have times like this, but then at the end of the day, the risk is minimized the higher you go. And your liquidation point, your stop loss, they're way in the past, yeah? But I think that this is some sort of WXYXZ 333 complex correction. This is your subsequent 2 degrees of AB basing and a pivot, and you do get a move up and out of this channel, right? The first test is going to be the midline. We're going to have to consolidate at the midpoint of the channel, all right? Because we all know when you get in a channel, the midpoint is resistance when you're below it, support when you're above it, and so is the bottom is support, the top is resistance. So we should be matriculating to the top of this channel. This is just what the price action is showing me, okay? Obviously, we're going to have to make a move up to the midline. And if we do, and consolidate at resistance, okay? Not reject, but consolidate at resistance, then this is very likely to be the bottom of this particular move, okay? So yeah, what I'm reading more precisely is an A wave here and a B wave here, an A wave here and a B wave here for my second degree, and I'm reading this as some sort of let's see, A wave, B wave. I don't know. It's tough. I don't know what to make of this right here. Is this impulsive? Is this a wave 4 going into wave 5? Perhaps. I don't know. 1, 2, 3, 4, 5. I'm not exactly sure. But my hunch, my read on this price action is something akin to an inverse head and shoulders breaking up and out. Okay? Something like that. And this is the next small time frame target, and again, going to the top. Okay, so that's what I'm seeing with Bitcoin on the really small time frames, on the 15-minute time frame. Okay, let's corroborate that with what we see in the total cryptocurrency market cap. Okay, so let's look at that. Whoops, that's not what I wanted to do. Here, let's look at the total cap, because sometimes the total cap gives us some insight as to what the entire cryptocurrency market is doing, and what it's likely to do next. But I love trends, because no matter how sloppy you are, no matter how I don't know, could read this or that, 9 times out of 10, if you're going in the direction of the trade, and you're calling for a move in the direction of the trend, you're going to be correct. That is the beauty of trends. It's just you close your eyes And this is why a lot of bad traders, a lot, how do I say this? A lot of bad traders thought they were geniuses in a trend because no matter how sloppy their reads, they were correct in a trend. The trend just makes you feel like, damn, I can't go wrong, you know? So let's look at the total crypto market cap, okay? This is always kind of helpful and gives us a bit of insight, like what the entire cryptocurrency market looks like. Okay, for this also, I want to turn on the moon phases indicator. Okay, so again, remember, this is the entire cryptocurrency market cap. So this represents every single last asset in crypto. Okay, and our moon phases indicator is also really accurate here, where the full moon indicated the beginning of this move, and the new moon indicated the beginning of this consolidation right there, as you see, right? And so for 14, 15 days, you've been consolidating up and to the right. Why do you consolidate up and to the right? You do that when you're really fucking bullish. People don't get that. This is how you correct when you're really bullish. And people who expect a big move down don't understand how bullish we are, okay? So anyway, our total crypto market cap is showing us that. Another thing our total crypto market cap is doing is that it came up past this resistance, broke it, and retested it right here. Perfectly. So looking at the total crypto market cap, remember I said in Bitcoin, it's possible that we come back down to retest Bitcoin's high time frame downtrend resistance. It's unlikely, just looking at this total crypto market cap, because the total crypto market cap is showing us to have already performed that RS flip on a high time frame level of resistance, right? Turning high time frame resistance into high time frame support. It looks like it's already done that, so it's likely already happened in Bitcoin as well. Do expect the next big move to be up. Look at our momentum indicator, completely zeroed out and double bottomed with the daily, on the daily time frame. Okay, so this is beautiful. All right, now let's take this on a smaller time frame. Let's go on the hourly. So on the hourly, what you can see here, now let's get rid of the moon phases indicator. So on the hourly, what you can see here is that same channel. Okay, let's get rid of our momentum indicator. You can see that same channel here that we've been in for quite some time. I didn't draw that correctly. Let's do, that's a little better. This is, guys, this is corrective price action at its most bullish. This is why people can't wrap their minds around it. And actually, it's this. This is it. This is part of the previous trend right here. This is boom, boom, boom. Is it? Let's see. No. I was right in the... Let's draw this properly. This, my friends, is the definition of a running flat. I'll show you exactly what I mean by that. This is the definition of a running flat. You can't, I mean, if you want, like, what it looks like to correct in a bullish manner, this is exactly that. Let's make these solid. Okay. So, if you look at what's happened, let's actually go on the 4-hourly time frame, because I think we'll have a better perspective on this. Okay? I'm going back and forth on when the trend ends, and I want to say that the top of the trend is here. Right here. Is this what, well, forget the moon phases, but I think the top of the trend is there. So I'm going to move the trend back here. Okay. So this is what I'm seeing. You got to the top of your trend. This is kind of like your wave 4. This is your wave 5. And what you've done since is you've put in, we can actually fix this. Let's fix this. There we go. There we go. look at what you've done. You've put in a clean series of corrective moves. What are corrective moves? So, by definition, Elliott wave theory states that corrective moves are in flavors of 3. Impulsive moves are in flavors of 5. There's a reason I say flavors of, because it's not always exactly 3 or exactly 5. But typically, you see denominations of 3. ABC, 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 ABC. Do you understand? So, you could also read this like we did the Bitcoin. W, X, Y, X, Z. This is a triple 3. This is let's put it in, a triple 3 complex correction. Very likely that this is exactly what you're getting here, and what's making most people confused, right? Because these corrective patterns are confusing, because they just go up and down and up and down and up and down, and they're complex corrections that few people have the ability to read. But what's important is not necessarily what the corrective complex correction is, but more what comes before and what's likely to come after. So before you have a trend, you go in your intra-wave correction, and you're likely to continue the trend. Okay? So this is what I'm seeing. And on the even smaller time frame, let's go on the 15-minute time frame, I'm seeing the same thing we're seeing in Bitcoin. All right? What do you see here? I'm seeing this as being a series of AB bases, okay? I think it starts right here with this wick as an A wave. This is my B wave, okay? So this is perhaps my first degree of AB basing. This is my second degree of AB basing, okay? And this is my pivot, okay? And I think, just like in Bitcoin, my impulse starts here today on the 6th, right? And that corroborates what our moon phase indicator is showing. That this is the beginning of more upside, the impulse that takes us up and out of this range, that takes us up and out to the next phase of this larger move, okay? So the total crypto market cap, right, all of crypto put together, put on one chart, is telling us the same thing, right? That we're likely to go up from here. The moon phases indicator is telling us that as well, okay? So that's pretty much it for Bitcoin and the entire crypto market in a nutshell, okay? What we can do at this point in the show is look at specific, we can look at specific assets, right? We can go through our watch list, and if anybody has anything that they want me to look at in particular, I'm happy to do so. But yeah, that's pretty much it for the analysis and my outlook and what I expect and why I expect that. So, Cardano. This is first on our watch list. Kind of like Bitcoin, but a little more of a rising wedge. You've got that pattern, okay? And we all know, pattern trading's, it's neither here nor there in terms of predictions. You can get a break up or a breakdown of these patterns. But what's important is always you look at the context, okay? The context is a massive uptrend following a massive accumulation of many hundreds of days, a massive break of resistance and a retest of that resistance as support, okay? And a strong coiling of price action, okay? There's a possibility that this breaks down momentarily and retests this strong resistance already tested as support, or that we break up. But based on the fact that the next strong support level has already been retested very clearly, there's no functional, practical reason that price return to these levels. So for me, I think it's quite clear this breaks up, okay, if I turn on my momentum indicators, this is likely also what is going on, because my 4-hourly momentum time frame is all the way down in oversold territory. So it looks like it's looking for a move up. Okay? When I go on the smaller time frames, jump down into the 15-minute time frame, what do I see? I see some AB basing. Okay? I see this as my, let's see, this is clearly my initial break of structure. This is my big B wave. This is my small A wave, small B wave. This is my pivot. And this next move off of this support line is going to be my big move. Okay, so that's Cardano. Okay, so let's actually stay with these. No. Let's stay on the 4-hourly time frame, and then we'll zoom in accordingly if necessary. Okay. Moving on. Algorand. Same thing. All right. These momentum indicators on the 4-hourly time frame are all oversold. That's a really good sign for continuation to the upside. Algorand, same thing. You have a rising wedge, and you're looking to break that rising wedge to the upside. You've been in that rising wedge for 2 weeks now. Okay, and it's just a series of corrections in that sort of that pattern. Okay, what I'm seeing here though, it's very skewed, but I also see a complex corrective pattern, a flat complex corrective pattern, 3 waves. Let's see. I see this as being one wave, this as being a contiguous flat correction, and then this as being like kind of like a WXY. That's what I see here. Do you see that? So it's a complex correction, meaning it's kind of it's sandwiched. It's what's the term? It is compounded. It is compounded. That's the best way I could see it. Say or articulate this. I want to just break down how I'm reading this, and this has helped in the past. Look at it in terms of a series of patterns, and you can work from inside out or outside in. It's just pattern recognition. Do you see the flat correction here? Okay, that flat correction is a part of a larger flat correction. That is my intermediate move. So I'm seeing this as my initial break of structure, my W. I'm seeing all this as my X wave, and then this is my conclusive impulsive Y wave. So that's a double 3 complex correction, but it's squeezed in this rising wedge, which is extremely bullish, but it's still a complex flat correction, double 3. That's how I'm reading Cardano, or Algorand rather, and this is again most likely my 2 degrees of AB basing and a pivot. After this double 3, you put in your consolidation reversal channel. Let's go on the small time frames and look at that, and it looks exactly like what we would expect an AB base pattern to look like. Initial break of structure, subsequent B wave. That's my first degree of AB basing. Secondary break of structure, secondary B wave. That's my second degree of AB basing. And this is probably my pivot right here. My pivot, a zigzag, big move coming. And that big move coincides with a break of this resistance. Does that make sense? So that's how I'm reading this. This is nice. This is very nice. Again, it takes time, but guys, the best things in life take a little time. The fact that you've taken 2 weeks, this is really great. Okay, Watch this. Here's the story. I always say, if you look at the chart and you know how to read the chart, it tells a story. And the story is, we've just started the bull market. We broke out of the bear market accumulation of 234 days. Not only did we break out of it, but we retested it as support. Okay, so that's the bear market's over. That's the first sign. The second sign of that the bear market was over is that we broke this 434-day level of resistance, turned it into support. That's your confirmation for those who, maybe they weren't sure if this was for real. That's a confirmation that the bear market is over. Okay, the downtrend of the bear market is over. And then, what's it doing? It's basically saying, I'm now going to reaccumulate. So everybody who thought, oh, this is not true, this is fake, is going to also have another chance to lose. Because trading is a zero-sum game. Some people win and some people lose. For you to win, somebody has to lose. For somebody to lose, somebody has to win. Not everybody loses, not everybody wins. The way people get caught is, and it's not that, the idea that there's some old fat white guy in a corner somewhere with a suit and tie, manipulating everything and, making so that they win and everybody loses is bullshit. People like to make up reasons for why they lose and give excuses. No, the market's there for everyone to read. But can you read it? This is a reaccumulation channel. And the most telling thing about this channel, the most important and the strongest and the most compelling bit about this channel is the fact that it's happening above resistance. It's happening above resistance. So the 234 days that you spent going sideways in the bear market, it's happening above that. The 434 days or 33 days that you spent going down from 2021, May of 2021, I believe, was your top at 69,000. Or was it October? I don't know. Whenever you hit 69,000 per Bitcoin, you spent 434 you spent 434 days down from that point. It's happening above that. That's the story. It's basically, I'm going to take a rest. People are saying, well, the price can't keep going. And it says, okay, I won't keep going. I'm going to take 2 weeks break. And they say, oh no, that's not enough. It can't keep going. It literally has gone sideways for 2 weeks above the major resistances of the bear market. And people are still bearish. People are still kind of on the fence. It can go up, it could go down. There's nothing more compelling. If you know how to read a chart, that story tells you everything you need to know. And the fact that you've been accumulating for 2 weeks above these major resistances, what does that actually mean? Practically speaking, people have time to buy. If you look in the past, and I don't follow this as much as I used to, but you can look on the Bitcoin blockchain and you can see there have been very, very, very significant orders of Bitcoin placed. Meaning people have bought a lot of Bitcoin and the price hasn't moved. That is basically showing that this is a reaccumulation zone. This is basically the calm before the major storm. You can't see this in all the indicators because some of the indicators are going to show, for instance, if you look, you're the type that reads death crosses and golden crosses. If you go on the weekly and you use the 200 moving average and the 50 moving average, you can see a death cross on the weekly. Whereas if you look on the daily, you could see a golden cross. Now, if you understand price action, the high time frame typically tells the more important story. So there's tons of confusion there if you're only relying on indicators. Some indicators are going to show bullishness. Some indicators are going to show bearishness and exhaustion of trend, right? Indicators aren't best at reading the whole story in the context of it. This is why you have to develop the skill of reading the story, reading the price action, and then using the indicators corroboratively. But that is the story, my friends. Reaccumulating above major resistance for a move up. And people have had time to buy. Also, people have had time to re-enter their shorts. All the crypto savvies of the world, all the crypto capos of the world, the people who are really bearish and saying, all the Garrett Soloways, oh, this is going back down to 10,000, 8,000. Okay, well, if that's true and they're not lying to their public and they're really, convinced that their reads are proper, they're going to take this opportunity to open short positions over here. Okay? Or over here. Okay? All of that is taking place and has had the opportunity to take place as the price has gone sideways for the past 2 weeks. I want you to understand that. That makes this move that's coming that much more epic because there's liquidity being gathered, liquidity being cultivated in this region. Okay? So that's not just true for Bitcoin, but it's also true for all the altcoins that you're seeing. This is exactly what's happening. There's an opportunity to gather orders, buying orders. There's an opportunity to gather sell orders. People can make big bags. So everything's possible here. Right? Moving forward. Algorand. Okay. Bonk. Okay, we looked at this before. Massive accumulation channel, massive AB base, right? It's already started moving up and out. So you went first degree, second degree, and then pivot. The pivot was here. And then this was the breakout. This is the wave 2, consolidation reversal, getting ready for wave 3, okay? This is beautiful. Do expect some upside. Dent. Guys, this is the easy part. I really want to emphasize this. This is the easy part. We put in so much work and so much toil, and this is really where, if the market was going to break us and be difficult, this is where it was going to happen. These accumulation ranges are really hard, with price going up and down in a channel, with the kind of unpredictability that, corrective waves and corrective accumulation zones have. We got out of that, and we retested it. It's over. Don't let them tell you it's not over. The charts are telling you, categorically speaking, objectively speaking, I've broken out of that. It's over. I've retested it as support. Everything that comes out of this is open. It's out. Okay? So this is the easy part. Don't get so nervous every time we go sideways. You've broken out of the major resistances. The chart's telling you. That's why learn to read the charts. Learn to have the courage of your convictions, of your reads. Learn the principles, basic principles. Serious resistance, broken, retested as support. You don't have to worry about breaking back into under resistance. And if you don't know that means you haven't proven it to yourself. You haven't done enough in reading charts and experiencing how serious long-term support is broken, retested, and then moved on from. Okay? But that's exactly what you see here. Dent has done that, and even though it's in the form of a rising wedge, which a lot of people think is bearish and is going to break down, it's not. It's likely going to break up because there's no pragmatic, functional reason that price should seek this liquidity. It has already visited it. Can it revisit? Absolutely. But it doesn't need to because it already did that. Yeah? So don't be surprised if these rising wedges break up. And rising wedges break up only in the most bullish of circumstances. And what's more bullish than the beginning of an epic bull rally? on the full moon. Okay? A lot of indicators are telling you the next big move is up. All right? Small time frame read. Okay. And again, just like what you see throughout the market, there's some sort of complex correction here, flat correction, that I would say is like this. Okay? I think you have an ending diagonal here. Ending diagonals are not leading diagonals. I do believe ending diagonals are a thing. They're just a series of corrective waves. 3, 3, 3, 3, 3. Sorry, wait. Yes, 3, 3, 3, 3, 3. Whereas leading diagonals are supposedly 5, 3, 5, 3, 5. But I don't think they exist. Okay, if you want my rant on leading diagonals, just rewind towards the beginning of the video. But I think that this is a simple WXY, right? WXY. My X wave is like this. 1, 2, 3. 1, 2, 3, 4, 5. I think that's my ending diagonal right here that completes this ABC or WXY, right? And then what I have here is a subsequent series of AB basing, okay? And then a breakout here. Yeah, so that's what I have with dent. Moving on. Same thing. Dodo. You have these diagonals, rising wedges, up and out of this resistance, okay? This resistance has already been retested. Important resistance retested as support. Important resistance retested as support. Moving on, you have these corrective waves. And I think here, the corrective wave was this. 1, 2, 3, 1, 2, 3, 1, something like this. 1, 2, 3, 4, 5. I think this is your running flat, and then from here you just had a series of AB bases, and actually Dodo has been in impulse. That's it. This is impulse. This is impulse. This is impulse. This is impulse. Likely to continue. Very bullish. Very bullish. Okay, Dogecoin. Same thing. I think this is your initial break of structure here, and I would say this is your X wave. Not exactly sure how you count this. Yeah, okay, I see. This is W. I see this. Do you see that? That's X. I always like to work from inside to out. So I see this as a nice, clean, flat correction. And this is the beginning of it. This is the end of it. This is why they're complex waves, because they're called complex corrections, because they're compounded. Okay? So I see this as a WXY and then AB basing over here. Okay? And I'm looking for a breakout. At the end of the day, on the higher time frames, it's a rising wedge breaking up and out. Okay? So that is Dogecoin. Ethereum. I would say okay, this is right here. My WXY. I think this is my double 3, and then everything over here, let's see. Yeah, everything over here is my AB base. So I've got my zigzag, that's my first degree, my flat correction, my second degree. This is my pivot and my breakout, okay? These things are about to break out. The 6th is today is the first day of the full moon. And I think this is the day we break out. Litecoin, same thing. Okay, you have some way, somehow put in a double 3, which is what I'm seeing here, and then a series of AB bases. Okay, and I think that the AB bases are here somewhere. I think this is my this is my zigzag, my flat second degree, and I think my pivot's over here. Okay. See, AB bases are tough to read, but at the end of the day, what's useful is being able to see any kind of semblance, and even knowing that they exist. It makes your read so much more sensical. It's really like hard and almost impossible to read price action consistently, not having knowledge of any kind of AB basing. You start kind of twisting yourself into a pretzel, making everything impulsive and, you know, kind of crazy, nonsensical, like, you know, principle breaking, complex corrections. It's not that complicated. It just makes everything simple and cleaner. All right, moving on. RSR. It's clearly got into this area of heavy resistance, not both the midline of the channel of accumulation and your big high time frame downtrend of the bear market lasting about 500 days. But you've put in this, what looks to be a WXYXZ, a 333. Probably a 333. Yeah, likely a 333, and then a series of AB basing over here. Okay, looking to break out of that. SHIB. People are asking, what's the next SHIB? SHIB is the next SHIB. SHIB didn't do as much as people think it did in the previous bull market because it retraced most of its gains. It was not in pure impulse, okay? So people who always ask, what's the next Shiba Inu? Shiba Inu is the next Shiba Inu. If you liked what Shiba Inu did in the previous bull market and retraced pretty much all its gains, then you should love it now because it showed you the potential and it's really at a great value, okay? So yeah, we see you hit high time frame resistance, you consolidated at resistance, as we always say. That's very bullish. Consolidating at resistance is bullish. Bouncing off and being rejected from resistance is bearish. Okay, so you got this, looks like a triangle correction at resistance, A, B, C, D, E. That's how we count triangles in Elliott wave theory. And you have a continuation of this trend. Okay, so that's exactly what you're getting here. And you look to be probably, let's see, maybe you're putting in another triangle here. But it's just a series of breakouts. And, you know, some people call these bull flags, but you don't want to fade this trend. There's nothing bearish about this. Not a damn thing. Okay, here you have, again, a flat correction with synthetics. Okay, and I think this is a WXY33, and you put in a series of AB bases, and you went up, or wait, let's see. Yeah, series of AB bases, and I think your first degree is over here. Your second degree is in this zigzag. Okay, this is not a wave 1, wave 2 situation. This is a second degree zigzag. Reason being, this correction lasts so much longer than this impulse. So you know that this AB basing has taken this long at least. And I think this is finally your impulse up and out of this pattern. Okay, so again, do expect this to continue up and not find anything sort of in terms of resistance until at least the top of this rectangle, which represents the bear market accumulation for synthetics, at which point we do expect some consolidation at resistance before continuation of the move. Okay. Tron, super bullish, retested that 600-day triangle as support. Okay, resistance has been under for 600 days. People don't realize how bullish these moves are. They're epically bullish. People have been in crypto for less time than these assets have been consolidating under resistance. That's how crazy these moves are. They're not like, oh, I'm just gonna break out because I consolidated for 50 days, or I retraced for 100 days. No, we're talking the lifetime of the asset has been nothing but consolidation, and it's breaking out of a lifetime of consolidation, bearish consolidation. This is Tron. That's the story on the high time frame. This triangle right here, I'm just going to show it really quickly for those new to the channel who haven't seen this analysis. It's beautiful. Look at Tron. The lifetime of its existence. It's gone up, and then for literally about 600 days, I believe. Let's just double check that. For about 600 days, 637 days, approximately, because this is a weekly chart, right? It's consolidated in this triangle, this ABCDE triangle, which is very bullish, right? Impulse, consolidation. It just broke 630 plus days of consolidation, of bearish consolidation to the top, retested it as support. So resistance as support. What do you think happens next? How can you be bearish about anything having to deal with this asset or anything in this market at this point if you can read a chart even a little bit? You see what I mean? Like, there's zero bearish. And these people, and here's where I'll get on my soapbox a bit, there are people taking people's money, claiming to be experts, claiming to be master traders with huge followings, telling you that it could go up and could go down. That's the least, that's kind of the ones that are offending the least. The worst of them are telling you it's going down, and they know, and their MDX 5000 or whatever their paid indicators telling them that you shouldn't expect a big move. Do your own research, my friends. It's not even their fault. They're doing their best. All right? Do your own research. You make sense of the story. You can open up TradingView. You don't even have to pay for it, and learn to read the story that the charts are telling. Go on the high time frame and look. Here, this is a perfect example in Tron of an AB base. Your E wave is finished, right? The last leg of your corrective pattern, right? For your big ABCDE triangle. Then you're putting in what seems to be 2 degrees of AB basing and a pivot. What does that look like? First degree, right here. Second degree, right here. Pivot, right here. Breakout. Okay? Again, when you're thinking about why or how these concepts that we talk about every day, how they fit in, how they work, you can look and see on the charts. You don't have to make it up. And actually, to be honest, I would revise that. Let's see. Let me just see something. Yeah, no, I'll stick with what I said. Yeah? That's my first degree, second degree. This is my first degree. My second degree is this zigzag. And my pivot somewhere here. And my breakout. Okay, 2 degrees of AB basing and a pivot. And at the end of the day, even if you don't know anything about AB basing, you read patterns, that looks like a very nice inverse head and shoulders that is on the verge of breaking out to the upside. So that is Tron. Very bullish indeed is the story that this price action tells on the high time frames. Okay, back to our smaller time frame. XRP. Okay, what's the story here? Consolidation above major resistance. That is the story. Again, when you're reading charts, just read and understand the story behind what all of the technicals, all of the price actions telling you, right? Put it into narrative terms if you need to tell the story, because that's essentially all there is. There's no use talking about this stochastic RSI indicator showing this kind of divergence and this EMA is telling you this. No. Major resistance broken into above, retested as support, and consolidating above it. Expect continuation, right? And also, all of this is taking place inside of a channel. And we know channels trade how? By presenting support at the bottom, presenting resistance at the top, and support above the midline, resistance below the midline. Okay? Just tell yourself the story. Broken huge time frame downtrend, retested it as support, continued, broke the midline, retested it as support, consolidating above it. You're going up. Okay? No Elliott wave necessary. Just basic support and resistance. Keep it stupid simple. If your analysis is accurate, it will conform, it will corroborate or conform with basic support and resistance. It will be consistent with basic support and resistance analysis. Okay? You know that the analysis is bullshit when it's a 1 in 1,000 chance in happening, or it's so complicated you don't even remember it. You got lines going here and there, looking like a crime scene, trying to find a perp. That's not it, right? It's not a RICO chart for a mob, a criminal organization. This is just straightforward, practical, technical analysis. And in terms of the actual corrective patterns, here I think what you're seeing is this is your running flat right here. Okay, a WXY, something like that, and then your AB basing is here, and your breakout from your AB basing is there. Okay, Zilliqa. Okay, very, very clearly, first thing that jumps out at me is this pattern. Do you see how we do that? You just see what jumps out at you. That's a flat correction, almost unquestionably, right? So I know that whatever is going on here, this is probably, let's see. I want to say that this is an ending diagonal. So this is wave 4 of the previous trend, and this is my ending diagonal, wave 5. And then this is my initial break of structure. This is my X wave, if this is my W, right? Because these are complex corrections. And this is my Y. And then my AB basing starts here. That's it. Okay? But what's the story here? You're consolidating on top of old resistance. And why is it on top of old resistance? Because you not only broke above it, but you retested it as support. That is why you can be confident that all this stuff is bullish and you're not afraid to break back down. Okay? That's the story. In order for you to really not just know that, but understand it. And what does understanding mean? When somebody understands something, they do it. It's not, I technically understand that. I intellectually grasp that. That's not understanding. Understanding is when knowledge becomes action. You don't do it. Like if I ask you, do you understand how to walk? You don't say yes, theoretically speaking. No, you just walk, right? If you understand something, you're doing it. You don't ask any questions. So if you understand these concepts, you're trading them. You're putting money on the fact that, yes, indeed, breaking high time frame resistance, retesting it as support, and then consolidating above it does not present an issue or a threat of a breakdown below what has already been retested as support. If anything, worst case scenario, you retest it once more. But a breakdown below is not something you're afraid of if you understand that concept. Okay? So that's Zilliqa. I think the AB basing here is right here. 2 degrees of AB basing in a pivot. First degree, I think. Second degree right here. And then the pivot is right here. Okay? V-chain. Okay? Midline of a high time frame. Resistance, broken, retested as support. Continued. And I think... Okay, I think you have some sort of running flat correction like this. And this is your AB base. I'm not exactly sure. But again, I'm going to hang my hat on the fact that you've retested this midline as support right here. And so you're targeting the top of this channel at the very least. Okay, so that's the read there. Okay, theta has done that, right? And as you can see, is matriculating towards the top of the channel, right? That's exactly what you expect. And this, mind you, is happening between a full moon, between a new moon and a full moon. Typically, between a new moon and a full moon, in a weak trend or a corrective trend, you can expect either down or sideways price action. You're getting upwards consolidation, which is showing you the character of these trends. Okay, so yeah, I do see this as being some sort of ABC flat correction. This is being the subsequent AB base continuation of that. Okay, so I think what you got here is first degree, second degree pivot. Okay, I do think your AB basing is this whole thing right here. Okay, so that is theta. Telcoin. Okay, same story, but now you're at the top of that resistance of the consolidation zone for the bear market. Okay, so a lot of these smaller cap altcoins are just now breaking their bear market accumulation, but they've been consolidating at resistance for quite some time. So here, I think that this is a legitimate wave 1, wave 2 situation, and you're going into a wave 3. Okay, something like that. I think this is wave 1, wave 2. I think you get wave 3, wave 4, something like that, and then a continuation. Nothing bearish about this. You're consolidating at resistance. Matic, you did that. What did you do with Matic? Same story. You consolidated at resistance. You broke it. You retested it as support. You continue. There's nothing bearish about this. It's doing everything you expected it to do. If you expect this to break down below, you don't understand the principles of price action. You just don't get it. You don't get it. Okay? But I think this is right here. I want to say that this is a type of wave 4 retracement in this impulse in that degree. Okay? Because if you look, it looks as if, it seems as if this was a wave 1, wave 2. Okay? And so you're in a wave 3 of this degree. Okay? Let's call this primary. And so if you call that primary, call this intermediate, you're in some sort of intermediate wave 4. Yeah, something like that. I don't know. Maybe. Okay, but again, I'm going to hang my hat on the principles of support and resistance, and high time frame resistance turned into support. That's always going to be where I put most of my my understanding and my, not faith, but that's where I am most confident in the price action, right? Here you can see DYDX in the past few days has done exactly what we expect. Broken high time frame resistance, retested it in a flavor of 3, right? Retested high time frame resistance as support in a flavor of 3. This should tell you that there's very little to no chance that you come back down and break down from this. This uptrend is real. This uptrend is true because it's retesting important resistance, turning it into support. I think you're now putting in on a small time frame 2 degrees of AB basing and a pivot to continue this trend. Okay, the story is the same. It looks a little different in all these different assets, but the story is the same. High time frame resistance broken, turned into support, and a continuation. Look at this trend right here in harmony. I want to really highlight this. Look how choppy that looks. If you have any sort of lack of conviction or you're on the fence, when you go up and you chop this much, you're going to come out. You're not going to sleep well in this kind of uptrend, because people, amateurs, novice traders, they're expecting straight lines, they're expecting smooth price action. But in the real world, on a real chart, sometimes you get choppy price action that is actually really, really trending, right? Bullish or bearish, it's trending, it's going in the same direction. But the fact that it goes up and down while keeping the same trend confuses a lot of people. Okay, so in this case, here's what I would do. I would set very clearly, let's see. I don't know if this is gonna make sense, but let's see. I'm not married to it. I don't love it. Okay. Looking at this chart, that is huge for me. This now, the fact that it's gone up 45 degrees, okay, I'm borrowing from Gann analysis, and the fact that it's continued to go up, I don't see why it would stop anytime soon. That's pretty much it, right? I don't see why it would stop anytime soon. I see this on the small time frame, if I just look at this, as a wave 1, wave 2 situation. Let's see. Is that wave 1, wave 2 situation? Yeah. Sorry. This as a wave 1, wave 2 situation. I see the time it took to go up here and to come back down in a flavor of 3 there, up in a flavor of 5, down in a flavor of 3, took about the same amount of time. So I'm confident that this continue up. That's the story there. All right, moving on. MOVR. What's the story here? High time frame resistance turned into support perfectly, right? Continuation expected. I am not afraid of this breaking back down, okay? Because this resistance has already been checked. This resistance has been dealt with. Flavor of 5 uptrend, flavor of 3 retracement took around the same amount of time. I think this is a wave 1, wave 2 situation. I'm expecting a wave 3, wave 4 situation. If this is true, then this is a 1, 2, 3, 4. And this wave 3 is a truncated wave 3 because it's about the same size as that wave 1. So what I'm expecting here is a wave 5 that is extended, okay, because wave 3 was truncated. Okay, remember, wave 3 can never be the shortest of the Elliott wave impulses, but it doesn't mean it can't be as short as wave 1. It just can't be the shortest, yeah? Okay, so that's MOVR, Moon River. Self-key, our last of our altcoins. This one is particularly volatile, but you can still read the story here. And the story is high time frame resistance turned into support right here. Continuing from this level, do expect a continuation to the top of this range where we consolidate at resistance and then eventually break out. Nothing's changed. All of the, because this is volatile, it's going to go up and down in a volatile manner. You don't concern yourself with that. That's not that important. What you want to do is zoom out, focus on the trend, focus on the, the high time frame support and resistance, and just read that. And that's pretty much it, guys. So yeah, Bitcoin is still a touch below 23K. And I guess to round out the show, we're just going to revisit our trade plan. It does look very much so on the small time frames like whatever you're getting here is a type of consolidation, right? Whatever this is at this level, it's a type of consolidation. And again, on all time frames, you can make use of support and resistance. How would you do that here? Look at what happened. You came down to this level, you chopped up, and you broke it. Now this was resistance, right? On this time frame, this was important resistance. You broke down below, you came up, you tested it once, twice, and you finally broke through. What do? With resistance that took a while to break on any time frame? You retest it as support. That's exactly what happened here. I won't be surprised if we stay above this level and then continue up. Do you understand? Because just like on the high time frames, this resistance has been flipped into support right there. So my fear of this breaking back down is decreased, if not eliminated, because that's already happened. There's no practical, functional reason price needs to come down below this area, or even revisit this level. It could revisit this level, but it doesn't need to. My stochastic RSI indicator on the small time frame, on this time frame, 15-minute time frame, is telling me the same thing. Okay, and that's why I think that this is likely a wave 1, wave 2, wave 3, wave 4, going into a wave 5 situation. But whatever the Elliott wave count is, it's not that important. I think, again, I'm going to lay, what's the expression? I'm going to what's the expression? I forgot how to speak English. I'm going to rest my hat, I believe. Rest my hat on the idea of this being a retest, support broken, retested, resistance broken, retested as support, consolidating, and back up. So that's the story on the small time frame, and it still is. And I do expect a breakout from this range at any moment. Kind of same thing playing out throughout the markets, right? So exciting. Yes, it takes time. It takes longer than probably we want, but you will be rewarded for correctly reading the markets. You will be rewarded for not getting shaken out of your trades. You will be rewarded for having conviction in your high time frame reads, in playing the trend and letting the trend play out. That is a fact. And that's it for me, guys. I hope that was helpful. I hope that was useful. Like, share, and subscribe as always, and I will see you tomorrow. Bye.